Here we are, standing in the middle of an unbelievable point in time. There has been more stimulus from governments around the world than ever in history. The money supply has increased at a rate so rapid, there's no way it won't cause havoc. The dilution of the currency will create massive malinvestment, unlike anything we have seen. But why worry? Because the Fed will bail you out, won't they? You came here for the truth, so let me unveil that for you. Today we are going to look at what has been happening around the world. Of course, we have seen now the introduction of what's coming around, and that is another infrastructure stimulus package. We have seen these before, and this is all because they need to get the economy going. The same economy they say that is doing well. Well, that kind of doesn't make sense, right? You look at all of the data and it's very clear to me, and that is it keeps people from knowing the truth. That's the whole point of it. You see, if people only sat down and understood the inner workings of government, the inner workings of the Federal Reserve, and understood these two separate systems, see how they work together, and realize neither of them ever are attempting to benefit the actual public. It's all about special interests. It's all about lobbyists. It's all about these groups and multinational conglomerates that are there to impose their will upon you. But people just have one simple way to feel good about themselves, and that is if we simply tax them, that's going to be the solution. I'm going to show you today, hopefully, and as I've shown many times before, that simply doesn't work. And there are so many layers to it, of course, but let's get into some of those today. Here we have a $3 trillion plan that they want to put through in new spending for the economy. A pair of proposals would invest in infrastructure, education, workforce development, and so on. They want to make the economy more productive. Well, of course, there's something I want to say right off the bat. I mentioned this many times before. It's better to spend on infrastructure. It's better that you get public works going. You pay people to do stuff, to fix the roads, to fix the bridges, to build things, instead of printing money and buying bonds of Apple. That's absolutely the case. However, it isn't really wise for one small group of people to decide where taxpayer dollars are going to be spent. That's what this is. You've got $3 trillion and it's going to go to the groups, the special lobbyists, special interests groups. The lobbyists will be, of course, working their magic through, and the alumni of these different corporations have their people in the right places to ensure that $3 trillion does not get spent on helping the people. People get the crumbs. I call it, like the funnel effect. The $3 trillion goes in here, and then you as the individual, you get your crumbs. That's it. So all of this up here, it's all waste. It's all waste, waste, waste. And then finally it gets to you and less is left over. That's what we need to understand here. The big businesses, they get all the nice big chunks of that $3 trillion. You get the leftovers. The Fed can fight inflation, but it may come at the cost of future growth. Of course, what kind of tool could they use to do this? Oh, wait a minute. That's right. Increasing interest rates. Wow. Is that even possible? I mean, we haven't seen that for decades and decades and decades, but yes, of course it is. And I argue that by increasing interest rates, the economy would be much better off. People don't see it like that. The Federal Reserve refuses to acknowledge it, but that's the truth. And that brings me to this. Richest 1% of Americans hide a fifth of their income from the IRS. And they say they have to do more in order to tax these people so that they pay their fair share, as they like to call it, and that would help with the revenue of the government. But if you see right now, today, what's been happening, they're willing to spend $3 trillion on the infrastructure. If you tax all of these people, in fact, if you tax 100% of the population and you tax them at a rate of 100%, listen to what I'm saying. You tax every single person all of them pay 100% of their income, okay, into the tax system, you still would not be able to pay all the bills. This system is done. It's finished. It's gone. Mathematically, it is impossible to pay the bills at this point. You're simply running on fumes. That is a fact. I know people don't like to hear that, but these are the mathematical facts. Scott Meinert from Guggenheim had this to say: the bond market has had difficulty sustaining rates at or near the Fed's neutral rate projection, and we see no reason to expect a different result this time. The sell-off has largely run its course. So we'll see what happens, of course, but this is what he had to say, and I think it's interesting. I have that same chart that he just showed there on Twitter in the next one, but let's just cover this really quickly. The Fed's mixed messaging on the yield curve. Jay Powell is giving conflicting guidance to bond investors. And I believe this is the wrong message to send, of course, because on one hand, he's telling you something, they're acting in a different way, the market is reacting in their own way, everything's kind of getting messed up, and this is because it's all a show. They're not willing to tell you what's actually going on. Last week's FOMC meeting showed that the Federal Reserve intends to maintain rates at zero even when the economy overshoots traditional measures of full employment and price stability, but Jay Powell stopped short of pushing back on the bear steepening of the Treasury curve. He's given conflicting guidance to bond investors. Dovish forward guidance is bullish for the short end, while the Fed's efforts to lift inflation expectations have been bearish for the long end. The belly of the curve is caught in the middle. And of course, he gets into a lot more detail in here. But I just think that when you've got somebody like this or any of the other prominent individuals out there telling you that the messaging coming from the Fed is not healthy, that is something that we need to realize. Right now, today, it doesn't make any sense, the actions that they're taking. It really doesn't. They drop interest rates down all the way. They tell you that the economy is fantastic and that it's growing and things like this. So why are you pumping in literally trillions of dollars from the stimulus in the government, and you've got trillions of dollars in packages, which will show you more in a second, from the Federal Reserve? It doesn't add up. FOMC projection of the neutral rate and the market pricing of the neutral rate. And you could see that, we've had these sort of occurrences previously, and, clearly there's something going on here. I don't want to get into more detail of it, but you could see for yourself here on the chart. He's just making that full statement in the article. If you wanted to read it all, of course, the link will be in the description. If you look at what happened in the stock market, I talked about this many times before, but it was clear, as they mentioned here, that big tech stocks carried the market early, but smaller stocks and others whose profits are tied closely to the economy's strength have since roared back. So first, it was the big names, the so-called names that, everybody needs these names right now, no matter what happens. And you saw stocks that had these ridiculous valuations. Those were the first group. And then later on, as we came closer to the end of 2020, then a lot of those other smaller stocks started going absolutely crazy upward. Right now, we're seeing those tech stocks really lagging behind the performance of some of the others, but have no fear because, as you can see right here in the CNBC article, after the reopening, exuberance fades and interest rates level off, investors will rotate back into large cap technology stocks with strong free cash flow, recurring revenues, and increasing user penetration. So don't worry, keep buying your 7 shares of Amazon and everything's going to be okay. But the reality is, this is what it's all about. The expansion of the money supply. Here, we're just looking at the M1, but you look at it at any metric you use, it's been increasing to such a great degree. I mean, come on, look at where this was at the beginning of 2020, as you see here, all right? And then you look at it today, and it has increased so dramatically. You cannot turn that around. It is impossible. And yet they act as if, once everything's okay, they'll just reverse everything, and you can dilute a currency and not have it hurt people, particularly at the bottom end of the spectrum. This is very, very dangerous. I've got several charts here that I need to just cover quickly. Total debt versus the GDP. And essentially what they make the case here in Real Investment Advice is that debt growth retards economic growth. And that's an absolute fact. But they tell you that this is how you get that strength. Here, same situation. As you can see, the orange line, that's annual change in GDP. And then you look at the $1 of GDP per $1 of debt. And as we go throughout time, you get less, essentially. $1 gets you less as time moves on. And the worse they make the situation by decreasing interest rates, the effect is magnified. Take a look at this chart here. I mean, you could see all of the different facilities and different packages that have been put through, the central bank liquidity swaps and the primary dealer credit facility and all these different things that were put into place, and how much money has been put out there on all these different levels. And on the right-hand side, obviously, everything's bullish. The more money they print, that's bullish. But the way I look at it is simply a devaluation of the currency. Now, when you devalue the currency, you hurt the average person. This is the whole point I try to make. They are actually actively, don't believe that they have your best interests in mind. None of them do. They are actively trying to destroy the general population. Look at their actions. Look at what they do, and you have no other way to put it. There's no other way to put it. It is very clear to me. Take a look at the numbers. Take a look at the facts. Don't get emotional about it. Don't go left and right. No directions here, okay? Just look at the facts, and it is very clear. Real interest rates, 1998 to present. And of course, this has declined when you factor in the inflation. And let's see what happens with inflation, because many have expected this to get very hot, particularly when you got that $1.9 trillion stimulus. You got another $3 trillion behind. That's probably won't be $3 trillion by the time they get through with it, but it doesn't matter. We're talking about trillions and trillions and trillions and trillions of dollars that are put through the system. And people think that they're just going to get a paycheck. Small amount of money is put through into the paychecks. We're talking about all different systems that are out there. And of course, a lot of that will be converted into some special devices, and they'll be dropped 30,000 feet from the air in order to eliminate certain parts of certain countries that, quite frankly, a lot of people probably couldn't even point out on a map. This continues on. I mean, look at this. Your chip shortage has Detroit automakers struggling to maintain truck production and meet orders. We have seen a shortage in just about everything. And of course, semiconductors being so important today for everything that we use. I mean, it's not just computers. It's all over the place. There are chips in every single one of our devices today. And soon, perhaps they'll find the way in people. Oops, we're not allowed to talk about that. WeWork discloses $3.2 billion loss in 2020 as it seeks a SPAC deal. So if you don't succeed, try again, apparently. I don't know what's happening with this company, honestly, because my understanding is that they owned so much space in certain areas like New York and other places. But, are people working there? Are people actually actively in these businesses? I haven't heard too much, but I need to look into it a little bit closer, and we'll see what happens. I've covered this a few times before, a little bit. I have not done an in-depth analysis here on the channel before. I'm kind of waiting and seeing how this progresses, because quite frankly, to me, it's not that much different than what we see today. I'm talking about digital currencies as it relates to the central banks. And you can see here the financial services industry braced for what could be its biggest disruption in decades. It's about to get an early glimpse at the Federal Reserve's work on a new digital currency. Wall Street is not thrilled. The reason that I don't want to cover this more in depth at this time is simply that they're already technically a digital currency. All the money that's put out there, it's not being physically printed into bills, it's zeros and ones on a screen. So they're kind of already there unless there's something else to it and there's another layer to it. If there isn't, then quite frankly, we're already there. So it's more about semantics, but call it what you want. Some say Fed coin and whatever, but I'm looking at this and being just simply another level of their control. And, we'll look at it on a deeper level to really analyze, is this something that people are, they're trying to relate it to other things we've seen before and so on. But, at this point, there's no actual difference between the digital currencies they have right now that are trying to be basically something new, and quite frankly they're not. That's my whole point anyway. The race to a digital currency, dozens of countries' central banks are researching a digital form of money. And you could see these different countries: Bahamas, Brazil, Canada, China, Eurozone, Japan, and so on. But we'll ultimately see how that works out in the economy. Will there be a parallel currency? Will it be one that works in the back end? This is not the global currency that I believe is, actively will have to happen at some point because of a man-made crisis that they create in the financial system and the failure and all that. But perhaps the digital currency makes all of that easier. What happened with Bitcoin and everything, the desire to create a more secure system, in my opinion, that the private entities are doing something else altogether. They want to fix what's wrong with this system. The central bankers, they don't want to fix what's wrong with the system. They own and control it. They have the printing press. That's a whole different thing. So I'm looking at it. Don't worry. I know people have asked me to talk about it. I am looking at it. I just don't want to do anything and have any hearsay and have any speculation. This channel, I don't look at the speculation. I'm looking specifically at the facts. So when I have more data, more details, then I will absolutely bring it to you. If you found the video informative, hit that thumbs up button. If you hated it, you got to give me a thumbs down. Make sure you hit that thumbs down. Share your opinion. If you want to learn about e-commerce, you want to sell stuff online, you don't know where to go, you want to learn, you can do so for free, the AmazonGPS.com. The financial system, you're talking about the central banks, interest rates, all of that information is in my 2 books, and you can check them out at the link in the description. Have you seen this video yet? If not, highly recommend checking it out. A lot of detail. Click it, and I'll see you there.